And for my final video, number 3, I want to talk about precious metals. And there's 2 interesting articles from Silver Doctors, SD Bullion, that I want to talk about. And I know, you look at the charts, the bands, and this upward movement, pressure. I understand that you can look at any chart in the world, and when the club wants to do a number on gold and silver, they're going to do a number on it. But the fundamentals and the charts, the 50 moving day average, it was supposed to. I get it. I've seen it all too many times. But that does not mean that the data, like I'm about to talk to you about, doesn't exist. Which also proves that these metals should really be moving upward. Now, as you can tell, we're back over $12.50 for gold and $18 for silver. And I have not seen a smackdown now. It is like safely over 18 bucks. So that's, in the technical world, I don't know the exact number, but a little over 18 is a number that the club was trying to hold down, and now it's 1840 today. As I'm doing this video anyways. Where's the next stop? I think $21 or so, $21, around 21 is like the mark of, okay, this thing could really break out. But Stewart Thomson says, he's the one that wrote this article for Silver Doctors. Silver enthusiasts report to the rocket launch pad, says Stewart Thomson. And on the other side of that, different article, same site, Silver Doctors, record $10 trillion paper gold trading market continues to depress the price. But the interesting thing about that is something that we talked about recently. And Bix Weir brought it up a little while back first, I believe. And he said that he's like, if you look at last year, and this was, I think, for the silver market, it cost the club, if you will, 40% more money they had to throw at the paper markets to keep the prices down. In 1 year's time, almost 50%, half, 40% really, 41, 42, somewhere around there percent, had to be thrown at it. So my question is, well, how much would they have to throw at it this year to next year? And how much is too much? When does it get so obscene and insane that it doesn't work? So I want to start with that one first. Because I think maybe old Stewart Thomson may be onto something, and it may be finally time for silver and gold to really start rising. And he's mentioning this the other one about the $10 trillion paper price thing from SRS Rocco, which is srsroccoreport.com. Not only did global paper gold trading amount reach a new record high in 2016, it surpassed the previous year's total by nearly 50%. So that sentence right there tells me what Bix Weir was saying about silver was 40-something percent. And this is almost 50%. It's the same thing. The club had to throw just as much money at silver as they did with gold, and gold versus silver, same thing. They had to throw a ton of money on these paper exchanges to keep the freaking price down. This is simply amazing when we look around at the staggering amount of insanity taking place in the financial markets. With the economic and financial markets sitting on the edge of the cliff, it would seem prudent for investors to curtail their highly leveraged bets in the paper gold casino and buckle down by purchasing real physical metal. Unfortunately, the mainstream media and the financial networks have totally lobotomized investors by removing the following vocabulary from the mushy substance between their ears: wisdom, prudent, long-term, safe haven, and gold, silver. With the advent of Twitter, wisdom today comes down to reading no more than one sentence. Anything longer than that is a complete waste of time, when it's better spent sitting in front of 6 computer monitors trading digits. Forget about investing one's mind to build up a real company, when it's more stimulating to try to scalp tiny profits by trading stocks all day fueled by half a dozen monster energy drinks. This is called progress, a giant leap forward for mankind and technology. Global gold exchange notional trading amount hit new $10 trillion record in 2016. According to GFMS newly released 2017 gold survey, total global exchange notional trading amount reached $9.8 trillion in 2016, and this was up 46% from 6.7 trillion the year previously, 2015. These figures were based on the total amount of volume in nominal ton equivalent traded on 9 exchanges. For example, here are the top 4 exchanges, annual gold traded by GFMS. And guess who's number 1? I'll give you one guess. COMEX. Number 1, COMEX, 179,047 tons, most of which never left a vault, never changed hands, just paper was traded back and forth. Number 2, I think this is the Shanghai, 34,760 tons. The SGE, 11,793 tons. And TOCOM, whatever that is, never heard of that one, 8,541 tons. The total amount of paper gold traded on the 9 exchanges equaled 243,000 metric tons versus 180,000 metric tons the previous year. I took these values and multiplied them by the average annual gold price to arrive at the figures below. I also compared these figures to the total amount of physical gold retail investment for each year, which you don't really need to see it just yet. Actually, you may not need to see the chart at all. As we can see, the global exchanges traded a stunning $9.8 trillion worth of paper gold last year versus $42 billion in physical gold investment. Did you hear that? $9.8 trillion in the paper gold game. $42 billion in actual physical gold investment. That's how much money they now have to throw at this thing to keep the prices down. This is beyond insanity. With this sort of trading volume, the Monster Energy drink stock looks like an excellent investment opportunity. And why shouldn't it be? The Monster Energy drink stock price has surged nearly 10 times from $5 in 2009 to $46 currently. While this may seem a good stock to invest in, I am waiting until they sell Monster Energy 4s that you can just stick on your arm so you can continue trading without wasting time knocking down 5 to 6 individual cans. We must remember, time is money. So the question is this: what would happen to the physical gold market if a small percentage of the Monster Energy drink traders, if you will, purchased physical gold instead of the millions of contracts traded on the exchanges? According to GFMS, total gold trading volume just on the COMEX was a stunning 58 million contracts. Well, I've got the answer for you, Stewart. The little guys, nobody's trading on these exchanges. It's the big fat club. The left hand is selling to the right hand. The right hand gets it, holds it for a little while. Prices start to rise a little bit. They flood it back over to the left hand. He buys it, does the same thing, sells it back. Each transaction counts as trading the metal moving. That's why. Not only was the 2016 total 7.8 billion ounces of paper gold trading volume 34% higher than 2015, it was 76 times higher than the 103 million ounces of world gold mine supply. I decided to add the paper gold trading volume during the 1970s, when the gold futures market began. During the first year of gold futures trading in 1975, a total of 84 million ounces were traded. However, by the end of the decade, and as the gold price shot towards $850, total paper gold trading surpassed 1 billion ounces in 1979. Again, no one's really moving this metal back and forth. It's just paper trading hands. So again, what would have been the reaction to the physical gold market if investors purchased more physical gold in 1979 than the 1 billion ounces of paper contracts? Well, I will tell you what I think from some wisdom from Jim Rickards. I listened to Jim Rickards' interview with Greg Hunter today, so did I. And he had some very interesting things to say. One of Rickards' interesting tidbits was that Americans own about 1 ounce of gold each versus the typical poor Indian farmer who has acquired kilos of gold. So when the fan hits the cow excrement, the wealth of the world will move from west to east as Americans are forced to pawn off the remainder of their gold jewelry for much needed Monster energy drinks. God hath a sense of humor. So Stewart Thomson now, silver enthusiasts report to the rocket launch pad. And believe me, I've been waiting a long time for the rocket launch. So have you. I know you have. But I always go back to November 2014 when the CME Group changed the rules in gold and silver to put the circuit breakers in place so that if they move too much, they trigger and you can't trade them. There's only one reason they would have ever done that, and that's to control the price when it goes up and they lose control in their paper markets. And from the looks of how much money they had to spend last year versus the previous year, I think the day is getting closer, if you don't mind me saying so. Number one, he says, the spectacular price action of gold within what I've dubbed the uptrend of champions continues to be impressive. I've suggested that the rally is poised to accelerate, and that's clearly in play. Gold is poised to surge through the minor $1,270 area highs and race to my $1,315 target. All lights are green for gold, and for silver the lights are even greener, he says. I think the caption on the chart says it all that any silver investor needs to know right now. Here's a beautiful symmetrical triangle pattern in play. While the bears are probably sleeping this morning, silver is attempting an upside breakout. I'm not even going to show these charts. I don't even want to waste your time with them because, again, it can move at the drop of a hat by the club and the charts mean nothing. But again, it still shows there's momentum pushing. Something is constantly trying to push the prices higher, and the club keeps having to dump more and more and more money at this thing to get it to stay down. So I still want to hear what the guy has to say, right? I still find it, interesting and informational, informative. Excuse me. I would ask the entire Western precious metals community to think about how positive most institutional analysts are about gold right now. There's a reason for their confidence and for their very positive liquidity flows into the precious metals sector. Fundamentally, gold is being powered higher by excellent demand in India. The world's biggest wedding season is in play, by the way. Institutional investor concerns about the U.S. debt ceiling. The next deadline, of course, is April 28th. Still strong growth in China, and by the populism wave that is sweeping through most of the Western world. That wave of populism is led by the charismatic leader of America, Donald the Golden Trumpster Trump. The Golden Trumpster has differentiated himself from other politicians by attempting to do things he said he would do after being elected. Most Trump fans are focused on his charisma and his purported ability to overcome the peaking business cycle with tax cuts for aging Americans who currently can't afford a $1,000 trip to the hospital emergency room. To put it mildly, I'm a bit skeptical about that, but I'm very interested in his campaign promises to make U.S. government debt creditors take a haircut. I'm also focused on his clear commitment to a lower U.S. dollar, which I've talked about numerous times on my channel. The risk on U.S. dollar is disintegrating against its off-risk counterpart, the Japanese yen. The world's biggest liquidity movers are big bank forex traders. Clearly, they are showing major concern not just about the dollar, but about the general level of global markets risk. Gold is benefiting, and as inflation becomes bigger on their list of concerns, silver will move relentlessly higher. I refer to gold as the world's ultimate asset, and I speak of silver as gold's energetic little brother. That's because when inflation is in the air, silver tends to act like a well-behaved kid in a candy store. In time, the Japanese central bank will be forced to abandon QE, quantitative easing, like America did, and raise rates too. When that happens, I expect the dollar to go into literal free fall, and gold should be blasting above $1,900 with ease. To view another key chart, dollar chart, the dollar is a train wreck against the rupee. So if you look, he shows a chart, 3 months, whatever. The dollar against the rupee is dropping down pretty good. The only forex chart that is arguably more important to gold investors than the dollar yen chart is the dollar rupee chart. That's because the world's most powerful gold buyer class are India's Titans of ton citizens. The dollar has been tumbling against the rupee since late 2016, and that's when gold began its uptrend of champions price action against the dollar. The bottom line is that the tumbling dollar increases the gold purchasing power for Indians. They are using that power now to buy more gold. I'm going to add something too. I know you may have heard recently that some kind of economic law changed or whatever, and they now allow Islamic people and actually urge them to invest in precious metals. That was fairly recently. That's a big picture dollar rupee chart. He says it's probably the most horrific looking chart on the planet Earth right now. The US dollar is ready to incinerate against the rupee, creating a massive surge in Indian gold purchasing power. India's government is led by a Napoleon-like figure, Mr. Modi. He will come under immense pressure to cut the gold import duty as the rupee mauls the dollar and the trade deficit becomes the surplus I have predicted. My statement that all lights are green for gold may go down as the 2017 understatement of the year. A cut in the duty combined with the rise of the rupee should push Indian demand towards the 150 to 200 tons a month marker, powering gold towards the $1,900 area highs in the next few years. I expect the U.S. debt crisis to enter its endgame stage just as that happens. That should create a short-term parabolic price blast above $1,900 to about $2,500. I'll talk more about that $2,500 price target in the weeks ahead. As demand rises relentlessly both in the West and the East, there's more great news for gold stock enthusiasts, which is this. Mine supply appears to be near a peak. 2016 marks the third consecutive year of falling year-on-year growth rates, and we maintain our near-term forecast for mine supply to decline in both 2017 and 2018. Against this background, gold stocks and silver stocks are poised for a truly spectacular year in 2017, and even more so in 2018. The price action so far is likely just a taste of the coming upside fun. In early morning trading, GDX has raced up to the upper part of a rectangle. It seems poised for an imminent breakout and rally to my $26 target. I'm a relentless buyer of GDX on every dollar decline. Here's why. Inflation is set to break out to the upside. Indian demand is empowered by the now mighty rupee and the world's greatest gold investor demographics. A looming U.S. government debt crisis endgame lurks horrifically in the shadows. The bottom line, a rally to $26 for GDX will not mark the end of the gold stock's price action on the upside. It's only the beginning of what I have suggested is not just a bull market, but a real bull era. So that's his take on it, on some things right now. And again, it still makes me think companies like First Majestic Silver, some of these alt mining companies I've talked about. I have a feeling, and I mentioned it before, First Majestic is a fire sale. Now tomorrow I'm going to be talking to a guy that runs one of these like junior mining companies or something. I mentioned this yesterday about how he's on point. He's well aware of what's happening in the world, and he happens to run one of these mining companies. But so it'll be interesting to see what he has to say, and that should be the next day when I talk with him. But all this points to the same thing I've always talked about. Keep stacking your precious metals. You want to play around a Bitcoin on the side? Do it. I'm doing it. But have your physical metal in your possession for sure. And it wouldn't hurt, again, maybe to diversify a little bit and get to some of these mining companies. But that's up to you. Who is calling me? Gots to go. Let's find out.